Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. Well, stocks continue to go higher. It looks like Biden's going to be signing the plan today, the bill. Sorry, and will that be the bottom? I don't know. Kind of doubt it, but we'll see. One thing I really want to point out here is the big divergence in the Aussie dollar, and that I have to point that out. The reason why I want to point that out is because I was chatting about it in the chat room. It's kind of important because I think we will probably race up to the 78 and a quarter tonight with stocks as strong as they are. I think that's where we're going. But the problem that the Aussie has is that it's not following the S&P, and that's a bit of an issue for the Aussie longer term. That's not something that's going to affect the Aussie here in the next 24 hours, but it is something that is going to affect it a little bit more longer term. So let me pull up the S&P and talk a little bit about that. Okay, let me delete this really quick. It's an old chart, but here is the S&P for those of you that aren't in the chat room, so you can kind of see it. And by the way, the futures we're nearing the highs that we hit early February. Okay, I think I've got the chart here. Hold on. Here it is. Okay. So you can see the futures are near the previous highs, but the Aussie is nowhere near the highs. So the Aussie highs are way up here, and the Aussie, if it was keeping pace with the S&P, we would obviously be a lot higher, but we're not. And so I think that's a risk for the Aussie longer term. Okay. So looking at the Aussie right now, I mean, we still have this double bottom unless we get back below 77.20 roughly, which we went as low as 77.40, but we bounced obviously as stocks rallied. So as long as we stay above that 77.20, then we're probably going to trade up towards 78.50. Now, if you guys are looking for new shorts in the Aussie, that's where I would be looking, is right there. I'm not sure we're going to get there. It depends on how the market reacts today by the end of the day. But, I think that's probably where we're going. And, if you think about it like longer term, here, let me just go ahead and so, you think about this longer term, we're probably doing something like this. I would assume we're doing a, head, shoulder type of move, right? So we're not going to get, this right here, is 2-month process, right? So imagine we're, a couple weeks in, it might take another month for us just to consolidate before moving lower, if we're building like a head and shoulder pattern in the Aussie, which I think is possible based on the divergence that we're seeing. But what that also has to mean is stocks have to stop. And that, I was joking in the chat room, and I'm like, man, please, the Dow, let the Dow be up 35% today. That would be awesome. Like we hit 45,000 in the Dow today. That'd be great. Now that's probably not going to happen, obviously, but the reason why I was joking around like that is more of being just sarcastic, because I am probably just as frustrated as you guys is the lack of currency volatility right now. And that really is a product of stocks being stronger and strong all the time and hitting new highs. Every time stocks hit new highs, volatility slumps. And, in currency market land, we're just kind of stuck in currency market land, and that's not doing anything. Now, one last thing that I want to answer a question from Raman about the Canadian yen. or is it Amadur, or is it Ramen? I don't know which is your first name, but anyway, I'll answer your question about the Canadian yen. I do want to talk about the bond auction that's happening this afternoon. It's actually happening in about 20 minutes. So, keep an eye on the 30-year bond market yields, obviously. So, 10-year yields are actually bid up today. Now, surprisingly, we're holding up. I would have thought with stocks stronger, yields would be lower. And then, you can argue, well, the economy is going to be stronger, so yields have to go up. I get that, argument. But I think with stronger yields, it's going to be more of a tailwind for stocks. But that hasn't been the case. We've seen stocks go up and stocks hit all-time highs, yet yields are holding them. Now, yesterday, we had the 10-year auction. So today we have a 30-year auction. So let's watch yields. If yields start to break higher, and I'll just add an alert at the highs of the day, basically. If we start hitting highs in the 30-year, maybe that is the catalyst that drives or maybe puts a little bit of damper on the stock market. What else has to happen is you might get a little bit of a reversal in the stock market, and then people will say, well, maybe the stock market's falling because of higher yields, or maybe the stock market is giving the buy the rumor, sell the news. Who knows? But I think that we have to keep an eye on the 30-year yield today. So if the bond auction comes in a little light, maybe yields have to spike up as a result. And that's something that we should keep an eye on. So, Ahmed asked if I could take a look at the Canadian yen. So let's take a look at it. Canadian yen continues to scream higher. I mean, it is just, pushing higher. Where is this thing going? Let's take a look at the daily chart. Let's take a longer term view here. False breakdown. We'll measure from two areas. I want to measure from here to there, and then I want to measure from the top to the lows. So the actual that's all-time high up here. Let's go to this all-time high right. This magnet's not working. Hold on. Let me get rid of it. Right there. To the lows. And we are at the 38% retracement, like right now. That's pretty big. That's something to pay attention to. You can see it right here. We're basically there. Now, I know we're above it right now, but when you're looking at years worth of data, to be above or below a support or resistance level by 40, 50, 80 pips is not a big deal. So, the scary thing is that we stopped there once and now we're rallying past it. That has to be noted. Relative strength is divergent, but still it's kind of important. So let's go to the lower peak right here. Let me put in a different, I'll draw it. Let's see, from here to here. And see, we're above the 618. So, and the 78% retracement comes in, at 87.70. So that might be the next stop. I mean, we do have Canadian data tomorrow, so keep that in mind. I would think if for some reason, like let's just say for some reason, yields rally, we get the buy the rumor, sell the news, stocks come down, and then the Canadian yen reverses after it hits a new high here today, and it reverses at the lows by the end of the day. That would probably be a bearish event. I wouldn't count on it. I really wouldn't count on it. You know what I mean? I think right now we have to just assume that we're continuing higher. We have a lot of, overbought divergent relative strength, all that stuff, but it doesn't look like it's stopping near term. You know, near term, it looks like we're moving higher. All right. So there you go. And guys, I want to wish you luck today. You know, again, if I sound a little sarcastic in the chat room because of, you know, the equity market rally, I am. I mean, it's frustrating. It's maddening because I just want volatility to pick up, and volatility is just not going to pick up when stocks continue to rally. So hopefully we will get some sort of highs in the equity markets, like tradable highs, where we hit a new high and then we reverse and then we start bouncing around. And, you know, once we get into a range, that's when trading currencies becomes more fun, especially with, you know, expectations of rates moving. But for right now, we're stuck with equities moving higher, and it's maddening. So I get a little frustrated. Or just give us the damn blow off top, man. Let's just move to 4,000. Let's go to 4,300 in the S&P and then reverse really quick. That'd be nice. Let's do it like today. That'd be awesome. All right. Other than that, guys, just, you know, try to keep your head above water, trade small. If you're unsure about something, you know, wait. And if you really want to take a trade, let the trade come to you. Let it get to the price that you want it to get to. Don't sacrifice getting into a trade that you're chasing because you think it's going to get there. Just let the market come to you. All right, guys, have a great one. Good luck. Thank you all for your support. I appreciate you all. I'm going to sign off. Talk to you soon. Bye-bye.